The broadcast is now starting. All attendees are in listen-only mode.
Hi, it's Brian here at AbleSys. Welcome to the webinar. So we'll jump right in and take a look at the signals and what I suggest to be looking for on your AbleTrend charts, so you know when to exit and when to enter and exit. We always combine multiple time frames, and that's such a big help, because it tends to alert us of a choppy market before that starts, being that everybody will lose in a choppy market. But sometimes you just can't help it, because we're all at the mercy of the market. And, there are going to be days, many days, that it's sideways, it's choppy, it's in a narrow trading range, doesn't move much, and that's nothing anybody can do about that part. That's for sure. I wish we could. But if the market's not trending at the time you're watching it, then nobody's winning. So no need to feel bad about that, because the market has to make some kind of a sustained up or down move. Some kind of a trend has to be there to even have a chance to make any money. So it's AbleTrend's job to pick that out and to alert us when there is what we call triple confirmation, and all the time frames and the algorithms and all the calculations it's doing are all aligned together. And the first time they come together, which is all color coded, so that part's simple enough to identify, that's when we make the trades. Now, different time frames, keep this in mind, different time frames are going to have different signals. Obviously, that's the same way with any indicator and any chart. Anybody who's watched charts for any amount of time, knows that. Because you're taking the temperature or the pulse of the market at different times. The shorter the time frame, the more signals. The longer the time frame, the less signals. So you could have, let's say for an example, you could have a 3-minute, 9-minute chart, on a buy signal, but a daily, weekly chart is on a sell signal. Well, of course, because the daily, weekly is not concerned about slight little up or down movement, or that a 3-minute, 9-minute, or 1 minute, 3-minute would be, because a shorter time frame is much more sensitive. Day traders are just looking to make 5 or 10 or 20 cents, that type of thing. Get in and out very quickly, where the daily, weekly chart couldn't really care less about 10 or 20 cents. It's just, it's looking at the bigger picture, because a daily chart means your objective is to stay in the trade a lot longer, for weeks or months at a time, where, a minute's chart is just in and out in a few minutes. So this is a daily, weekly. MHK is the stock symbol. And we combine the daily and the weekly, and they both must agree before we take a trade. So the first time they do, like right here, back in the beginning of November, that's when you enter the trade at the finish or the close of that first bar. Because once it closes, it will never, ever change again. So that's why we always wait for the bar to close. A really nice little trade right there. That was a good one, because we stayed in that one, or at least the software suggested that we did. The hard part sometimes is keeping our emotions, to the side. You really almost have to check your emotions, at the door before you, or in another room before you go to your trading desk, because it's just gonna get in our way. Just gonna get in your way. You have to just put your emotions and your feelings and your thoughts aside. In other words, if you could take your brain out of your head, put it in another room before you go trading, because it actually makes things a lot worse. You just got to be very robotic. That's why I always say, you got to be like a robot. No brain, no thinking, just mechanical, whatever it says, because there's no comparison to our human brain, to the algorithms and the calculations being done, and the multiple time frames combined. And that's the hardest part in trading, is the emotional part. That's why, especially day trading, is certainly not for everybody, and because that's the hardest part to get over. And that's fine. That's why do a lot more longer term trading on stocks or ETFs, much less stressful. If that's the part that gets to you. So as long as the prices stay above the blue dots, obviously we're going to stay in the trade. That means we're safe. We've got daily buy signal, and how do we know that? It's blue. It's real simple. Everything is blue. We got the arrows of blue. That's the weekly buy signal that comes in once a week. So that's a super trade right there. That's a once in a lifetime type right there. But once it closes under the second lower row of blue dots, closes right there, then we'd exit the trade. Oh, let's just keep it simple. We're out at the red bar. And now we actually have a short trade. Be careful going short right now with the market in it. Just flying high, literally up probably 4 of every 5 days. It's what it's been averaging this year. Obviously the market's in a very strong uptrend since the pandemic started, about a year and 3 or 4 months ago. The market's basically going up. A couple of little blips where it pulled back, but this is a short trade. If you like to trade options, you'd be buying puts right here, because there's the triple confirmation short, which is the opposite of a long. Weekly sell signal, the arrow's red. Daily sell signal, the dots are red, and then a red bar, not a green, but a red. So, last week we, again, a disciplined, serious AbleTrend trader would have went short or bought puts at around 201, 202. And that'd be a good one, because you're at 190 today. So that's another, starting after the huge uptrend, big winner going on the way up. So far, starting out good on the way down. Now that's for daily, weekly. Now, if you like more of a swing trading chart, in and out in, say, a week or two type, of course, we'll stay in it forever. If it keeps on going up like this Lilly chart right here, Eli Lilly, nice little buy signal, triple confirmation right there. Here's the X, the dot. And you can use X's, arrows, big dots. It's the exact same thing. Just put different, I put different things on different charts, because, everybody uses something different just so they could see. So, a nice little buy signal right here that the software's still in. That came in about, came in about a month ago. Still in this one here, from 195, you're at 233. So you got a real good one right there. And again, as long as you stay above the blue dots, you're safe. Now, as far as missing the beginning of the trend, which is the same thing on that other chart, these are sweet spots. These are places you can get in if you've missed the beginning of the trend. Obviously, there's more risk involved because you're getting in at a higher price. Everybody, we all want to get in at a low price. Lowest possible price is the lowest risk. But these are sweet spots, and that means the price comes back to the blue dot in the next blue bar, which would be right there. Hits the blue dot, closes blue. There's a sweet spot. Hits the blue dot here. There's the next blue bar, sweet spot. Another sweet spot, and another, and another. Blue bars touching the blue dots. That's as low as risk as you could get. Plus, the original buy signal came in around 195, and it really didn't go anywhere for a couple of weeks. And you're only like 198, 197, 199. So, you don't really feel too bad getting in when it's just a couple of bucks higher. Now, of course, you can't touch it. It's at 233. Good stuff. Very helpful, that's for sure. And here's a sell signal prior to that. That was a small losing trade, because that's I show everything on the chart. It's going to be losing trades. I can guarantee you that for sure. And you've got a perfect triple confirmation sell signal right here. Red bar, red dot, red X. Started to go down, pop back up. Small loss, $2 or $3 loss there. And then a $40 winner that we're involved in right now. That's still going. So, the WinTick report, Jack, the WinTick report, not the WinTick indicator. The WinTick report will tell you it uses the daily chart right here, not that other chart that was to 130. So the win ticker report would have had a buy signal on MHK right here on November 1st. Because there's the first blue bar with the big blue dot in the middle. It just means that's the daily buy signal. You happen to have a weekly also because you have the blue arrow below. So there's your triple confirmation, what we look for. Now, if you're looking for sell signals, which is something I wouldn't be looking for, and obviously a very strong uptrend, I'd only be looking for buy signals, not sells. However, on the weekly report, on the win ticker report, a week and a half ago, 2 weeks ago, it would have been on the sell list. Because there's your first red dot with a red bar with a red dot on the daily chart. So simple as that. Keep it simple. Just red and blue. Okay, if we're looking to look at the mini Nasdaq chart, which is our favorite day trading chart, the mini Nasdaq, and I also like the mini Russell, as I say all the time. If the Nasdaq is a little too fast for you, or it's just too, which it is, or too much, you have to have a little more money and a little more margin. If you have a very small account, then you want to do the Russell, which trends nicely also. It's a good chart. So about 3 or 4 minutes after the open here, we've got a triple confirmation buy signal here. Now that thing really shot up quick. It was a real tough one to get in, but for those who did, boy, that was a mega home run right there. Because clearly getting out here on the red bar with a red dot from where we got in, that was like 95 points. It was almost 100 points. For just a one contract trader, the lowest you can trade is one lot. That's almost a $2,000 winner that AbleTrend gave today in the first 30 minutes of trading. That's a good one right there. That's you don't get that. The market doesn't trend like that often, so you just got to take advantage of that. If it goes sideways, nobody's winning. Just keep that in mind. If it's choppy and sideways, nobody's winning on that day. Then we got a real nice no trade zone here because obviously you've got red and blue going both ways. But this was the more clear, easier, nothing's easy, but easier trade to take, more obvious. It's just, for an AbleTrend trader, it'd be no excuse not to take this one because this is as clear-cut and obvious as you can get. And if you're looking at this live, right there, you're in because there's the big 3-minute arrow. You already had the 2-minute. Obviously, you've got the 1 minute. And you got a red bar, and it's a short red bar. So we'll pile those, extra odds on top of it. Also, that extra agreement, and even put a fifth agreement, if you can believe this. This is what made this just such a clear-cut, obvious AbleTrend short trade. The bar closes below the 3-minute support, below the blue arrows. Right here, it closes just slightly below it. So this was as obvious and clear-cut as you could possibly get. It would be impossible to get any more obvious than this for an AbleTrend trader, an AbleTrend sell signal. And down, down, down. Boy, this is a good one. Okay, there's 2 greens. Because it's got to be at least 10 points in profit before we would even consider using the 2 greens. Otherwise, we use the second higher row of red dots above the price. Still in it, never said to get out. Obviously, we're out on the blue bar right here. So we're out at about 870. We got short at 910. Boy, that was the most obvious 40-point winner you'll ever get on an AbleTrend chart. And that's $800 for 40 points in 30 minutes. That's $800, So that's a nice winner right there. This was really weird here, how it was all green. That's really unusual, but for some strange reason, the software just didn't like it enough to take it, which in a way is probably good because we'd have been stopped out here when it went below the previous lower blue dots. Let's assume this was blue, which it isn't. That would have been a sweet spot, but you know what? We would have only broken even. So, as it turns out, no harm done. The software knew something that, as it always does, more than you or I could have known. But I'm looking at that thinking, boy, that's strange. But turns out we wouldn't have won a dime anyhow. So that's why you got to trust in it. Obvious triple confirmation buy signal there, which just turned out to be about a break even and a no trade zone, and got a little choppy here. There's the next signal, triple confirmation buy signal. Small winner because we'd be out on the second lower row of blue dots right there. Sweet spot would have been another small loser, 3 or 4 points. Then it got choppy in this, got quite choppy there in the afternoon. That's a triple confirmation trade. We're going to lose on that trade. That's just, this is a 35-point price bar. That'd be kind of crazy to get in on a price bar like that. However, you got the sweet spot right here. No, it's not a sweet spot. Doesn't quite hit the dots. Doesn't quite hit the dots. Can't count that as a sweet spot. So then we jump on over to the Russell just for a quick look on the Russell. And the first trade of the day was about 35 minutes after the open right there. There's your first triple confirmation trade right there. And that one worked out real nice. That was a good one. Stop's just going to go a half a point above the top of the red bar. Ideally, I'd rather put it above the dots. But there was like 7 points away. It's just too big of a stop loss. So we just put it a little bit above the triple confirmation bar where everything was in agreement. And that worked out really, really nice. There's our 2 greens. Stop goes half a point above. You have to be at least 3 points in profit to use the two green bar exit or stop loss. And then we'd be taken out right there at about 23.12. We got short at 23.23. So that was an 11-point winner, at $50 a point. That was $5.50. So that was a real nice trade right there. Then obviously one big gigantic no trade zone here. Short trade here, that was a break even. Short trade there. That was about another break even. Maybe a half a point loser. Let's call it a loss. Obvious triple confirmation right there. Above the red arrows, blue bar, blue 1 minute, blue 2 minute, blue 3 minute. That's as clear cut as you could ever get. 2 greens here after we're at least 3 points in profit, and then we'd be stopped out right there. So we're out at 18, in at 13. That's 5 more points. That's $250 for every 1 contract that you trade. No trade zone, losing trade here. We lost a point because we'd be stopped out at the previous lower blue dot. Same thing here. Lost a point. Let's call it 2 points. I like to exaggerate a little bit on the losing trades, just to be extra fair about it. And then we got a triple confirmation sell signal here. Stop would go a little bit above the dot because it was only 2.5 points away. So, always use the dot above the dots because that gives us protection. The prices so often come up to the red dot and stop like it did 3 times here, like it did again here. So let's use that dot for protection so that we don't get stopped out. As much as you can, as often as you can use it, you want to sometimes stretch your stop a little further. Some people think you're putting on more risk, but you're actually putting on more risk when you put your stop too tight because any little pullback is going to get you stopped out. Then you'd have missed this whole big run right here. And this is a good one. But if you did miss it, you got a sweet spot right there. It turns out, would have made about a point on that trade. But if you got in over here when the software said to get in, that would have worked out nice because you'd have picked up about 5 points on this trade. Let's call it 4. There's slippage, there's commissions, and you'd be out on the blue bar with the blue dot. That's it. And that's the end of the day. So, good day, real good day on the Nasdaq on the Russell for intraday traders. And good day on the long term too, the long daily and weeklies. They've been good too, but there's certainly going to be losing trades, that's for sure. That's a big part of the business. What's nice about these triple confirmation trades and what I love the best of the no trade zones is it alerts us of a choppy market and keeps us out of trading at the time when everybody would lose in a choppy market. So we're avoiding about 50% of the chop, meaning we're avoiding 50% of the losers that the rest of the world is not, because or certainly that we would have been losing, but we're avoiding half of that. And not losing is just as important as winning. It's the same thing as winning. So real good stuff here, and I'm always glad to help with a 15-minute trading session. Anybody on a trial, I'll show you more in 15 minutes than you can do on your own in a month. And I'd be willing to do that for you. So anything I can do, call, email. I'm always at my desk all day, Monday to Friday. Always happy to help. You know how I can help in any way. Stay safe, everyone. Have a great weekend. I hope I was helpful for you. And thanks for being here.